Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
And I think for anything that we trade, we need to follow some type of risk management, and we need to say, hey, guess what? I don't think I'm going to take that trade. The risk isn't worth the reward. But at least I have an opportunity that I may want to take a product, and if I want to buy call options, I can, or if I want to buy put options, I can. And I have two different ways to see what the volume's like, what the option premiums are at the in the money, near the money, or at the money strikes. And so therefore, by using pivot analysis and the formula that I've just shared with you, you'll be able to use a monthly outlook at the close of business tomorrow on what October's market price action might be. And it could be pretty exciting. I think personally, even if the euro currency gets back into like the 141, 142, it's about a 5-6 point move in the euro currency in the next few weeks, maybe a little bit longer, so you'd want to maybe target the November options. On the other side of the coin, there's two sides to every story. You could also say, but John, wait a minute. Towards the end of October, the market actually bottoms against the dollar. And so therefore, if you're bullish the euro currency longer term, if you think the euro currency is going to, continue higher against the US dollar, maybe you sit out the next 3 weeks and you wait. And that's what the seasonality and price tendencies is telling us over the history the euro currency has traded. So just wanted to give you, not to confuse you, but just to give you several different ways to take advantage of this situation. Right now, generally speaking, the euro currency peaks against the U.S. dollar. Therefore, we should see the euro currency index, and I'll go back to that, we should see the euro currency index go higher. And so we have a monthly pivot support, as we've just indicated here. We have, and that's what this green line is right there. We have this declining wedge pattern drawn out, as you can see here. And if that comes to fruition, then we should see the market move higher. So at least with the way we're staring at this chart representation of prices. So we have several different ways of looking at the market right now, confirming indicators. Now we have to decide what's strike price A, B, what's our risk factor. So obviously I would say by just looking at this chart, not having the conclusion of the month in front of me yet by 1 day, I would have to say easily if the market is to move up, we should probably, and I don't think it's any stretch of the imagination, that we might be able to get back into maybe this area right here, 74. It would be about a 6-handle move on the euro currency. That would be about almost, what do you think, the median prices from this high to approximately this low, correct? So in essence, there's one other thing I'd like to mention here. Some of you folks who study candlestick analysis, I don't know how many we have in the audience, are candlestick aficionados. But I would like to point out one potential candle pattern, and it didn't show up too well with that color, so let me go to a better color here. It's not showing up too well, but I think you can see where I'm drawing here. This is what we call a hammer candle pattern. Generally speaking, the lows of the hammers offer support. Now, it took a long time. This was last year. Now, keep in mind, this is a weekly chart. But this took a long time for the market to come down and test the low of that hammer. So there's several things that we could say. Boy, this market came down, tested support. If it does go up, boy, it would probably come back to at least the midpoint of price ranges, which is the top of this high and the bottom of these lows. So I would say don't buy call options for the next 60-day or 90-day expirations expecting 80. That may not be within the realm of reality. The realm of reality, if this trade will work out, is possibly looking at the 73.5, 74 range. With risk, we should not see this market get down below this area, this low here at approximately 66. So there's a good from 68.5. You have a 2.5 risk for possibly a 5.5 point gain. So it's almost a 2-to-1 risk-reward ratio by just looking at price action. All I have to go with me is traditional chart patterns here, candle patterns. I have pivot point analysis and seasonal tendencies. Now I have to make a determination, what's the best route to go for my money? Is it by selling puts or buying calls? Once you come up with that answer, guess what? ISE, they have the product to do both strategies, okay? Now, the Japanese yen was in the news just recently, which was, I think pretty amazing because, and I wanted to show you how the person's pivots really respect all types of different products. If it has a range and it has both time and price consideration, pivot point analysis is something that can truly benefit you. Here we see a declining trading channel, as you see this downtrend, based off the highs and the lows. But what's interesting is look at all the times this market has actually respected the predicted highs and low of the marketplace. Over here, the highs, it kind of crossed below the lows, but it came up near the pivot point itself, and that's, let me just describe what you are looking at. The red line here, that's the predicted resistance for the month. These are monthly. I didn't change anything on you. I'm just sticking with monthly for longer-term outlooks here. This is the person pivot indicator. It tells us, what the potential condition of the market is, and with that, it also gives us a target of what the potential range might be, okay? So armed with that information, once again, at the end of each month, it tells you, here's what the potential high might be, which is this red bar, and here's what the potential low might be, and there's that bar. So instead of getting all bearish in the hole, look for the market to get back up to pivot to resistance, and here's your target of what your support might be. Now, that's very powerful information for an options trader. And the reason it's powerful is because, I know that if the market rallies, it's a lot cheaper to buy puts on a market rally than it is to buy puts on a market decline. And if the market's coming near predicted support, I might want to wait to the end of the month to see what the outlook is. And here's we get into June, and I'll just draw a box in June for you. If you get into June, look what happened. The person's pivots accurately defined the market was looking as a bearish market outlook. And how do we define bearish market outlook? Well, the predicted resistance was lower than the preceding time period's resistance, and it was targeting a lower low than the preceding time period. So at the end of 1 month, if it's giving me a target of lower highs and lower lows, that is what I call a bear outlook, bearish outlook. Armed with that information, looking at bearish outlook, I'm able to make a game plan. If the market rallies back up to resistance, now I can start saying, well, here's what the predicted support is, way down here. First off, we have to get down here. That's pretty wild. But I can start buying put options and planning for the market to move lower.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.